let's talk first, maybe just quickly describe what the VWAP is, and then why you decided to use an anchored VWAP instead.
So for instance, I can look at today for the SPY. Let's look at well, here it is for Monster. I have Monster up. And on a Monster, what we saw today was the stock. So this is 1 day right here. This is today from this point forward. So we gapped down a little bit and sold off for the first 15, 20 minutes. And then we closed above the daily for 1 minute. Okay, so we had one bar close above that VWAP for the day. That's also where we saw yesterday's volume weighted average price. So it got above the 1 and 2 day volume weighted average price right there. I bought right in this general area. I had some yesterday too, but I added to it today. And on my add, my stop was below the low of the day. What that told me is from the beginning of the day, just the first 20, 30 minutes, 35 minutes here, who had control, the buyers or sellers? If it was below that volume weighted average price, it meant adjusted for volume, the average price that this stock traded at started out right here and then declined. As it got back above there, it told me the people who sold short on the open and were feeling good about, maybe it, their thought was maybe it was going to break down something like this and continue lower. Instead, at that point, they were losing money. The dip buyers who accumulated, they were in control. So I want to be on the team that's winning based on, what the bigger trend is as well. Of course, it's not just the 1 minute, but on the 1 minute chart, here for today, you can see the buyers had control the entire session because we had a beautiful pattern of higher highs and higher lows above that raising volume weighted average price throughout the session. And unlike a simple time-based moving average, you can see that down here where the volume is, as the volume really sped up here late in the day, it dragged that volume weighted average price rapidly higher because it's assigning more value to where the volume traded. So it's going to give you a more accurate picture versus a time-based moving average. You might have a 20 period moving average, let's say, that looks like this throughout the day on a 1 minute chart. But this tells us, the buyers are in control as long as it's above that level. When we back it up to like a 15-minute time frame, what I have here is the year to date. I just keep that on all my charts. But let's say we wanted to look at it from the last little higher low right here. So that was the 2 days. So we can look at it and we can anchor it from all these key levels. So if we go back to what we were talking about with the SPY, if we look at the SPY and we say, here's the pink is the year to date, the blue is the 20-day moving average, green is the 50, and the black is the 200. Just so I don't confuse people. But here's the volume weighted average price anchored to the all-time high. So as we made this pattern of lower highs and lower lows, and as we know, we broke that trend line and then we kind of dropped back down below it. Well, that trend line, we saw that volume weighted average price off the all-time high was right there as well. This time it rallied up to it. It pulled back a little bit. Now it's fighting to hold that. So again, this is kind of that balance, finding that from this point, the average short seller is now losing money. From this point, the average buyer from that high is now, in a winning position. It's the best way to think of it is a dollar cost average. If you were to buy $1,000 worth each month, consistently in here, or short $1,000 each month, your average price would be somewhere along this volume weighted average price for that time. So it tells you with 100% certainty from this point, the highest point this market ever traded at, the average participant is now in a winning position. It's the bull's game to lose. It doesn't mean they're going to be able to just hold on to it. We saw previously that we got above it right here, but then got rejected that trend line and 200-day moving average. So it's a great complementary tool. And a lot of times, especially for shorter term timeframes, it's a great standalone tool. And it's a great standalone tool for, earnings reports, for instance. DT, these guys, Dynatrace, on the daily time frame, we can look and we can see, they reported earnings right here. So I want to look at that and say on a 15-minute time frame, this is the event. And the buyers gain control initially. And you'll see this a lot of times on the daily chart. It gaps up, it pulls back, regains the VWAP, and then the buyers take control. Well, they lost control over here, and then that acted as resistance. It acted as resistance, and now it's kind of balancing back and forth again. I look at this 5-day moving average as well, and I'm not long this stock, but I want to get long here tomorrow, because when I look at the daily time frame, I see a stock above a rising 20, 50, and rising 200-day moving average. And then I look to the weekly time frame. We're above a rising 10, 20, 30, 40-week moving average. We can look at traditional up, stage 2 uptrend, stage 2 3 distribution, stage 4 decline. If they didn't scare you out, they wore you out. All of the moving averages are heading higher. We broke resistance on a big increase in volume down here. And when we look at the average price from the all-time high in Dynatrace, so I'm just going to take this anchor tool and drop one right there. That's that purple line. And look at how we're holding above that line. Well, that gives me added confidence. We had a fundamental event, the earnings report. After that earnings report, we've seen this, kind of battle between the buyers and sellers. Now above here tomorrow, I think the buyers take control, and my stop will go for me initially under here and here. I'm going to have 2 stops. Half of it underneath this little low, just to keep it a little bit tighter. So I don't think this one will get hit, but just because if I get shaken out of part of it and it rallies back up, then I'll still have part of it, or I can add back to it later. But that's, the type of stock that I'm looking for in terms of using the volume weighted average price on multiple timeframes. So it all comes back to, volume weighted average price over multiple timeframes. So we can look at it with this view, where I have a weekly chart, the daily chart, the 30-minute and the 10-minute time frame here. I don't want to confuse people with 4. 2 is enough.
Yeah.
But that's how I kind of look at the, how these time frames flow together.
Yeah. So Brian, I remember it was a few years ago. We were at the Money Show, and I watched your presentation on all of this. And what was really interesting to me is that this is what institutions are using. And that's when it really clicked, when you were going through a number of these examples, and you were just talking about how the institutions are using this. These are the prices the institutions are paying for these stocks. And at that point is like, this is a natural fit towards our methodology, right? Our whole methodology
100%,
is based around trying to figure out what the institutions are doing. And so in addition to kind of having the traditional 50-day moving average, 200-day moving average, this gives you almost real-time, more specific, stock-specific prices when you're using an anchor VWAP.
It's 100% true who's in control from that event.
Yeah.
So, in the book I described that Ken Griffin, who we just, who's just crowned the all-time, highest earner in terms of hedge funds of, Soros, Druckenmiller, you name them, all those guys, he's earned more money than any other hedge fund out there through his fund and BlackRock. BlackRock, as we know, is the world's largest, market maker, principal agency business, principal and agency. But 2 years ago, when he was called to Congress to testify about the institutional and BlackRock's role in, not BlackRock, I'm sorry, what's it? Citadel.
Citadel, yeah.
Thank you. Citadel's role as a market maker in GameStop and AMC and, the halts and all that nonsense. I watched the testimony, which I rarely do stuff like that. But something that he said really struck out to me. And I put his quote in the book because it's really powerful. Because people say, well, why does the anchored volume weighted average price have significance from a certain date or event? And what he said was, 36% of all of our business is algorithms, or maybe 63. I don't remember the number. He said, and the large majority of that is based around volume weighted average price orders. He went on to say it's not just for one day, it could be a week, it could be a month or longer. So here's the guy who's making more money than anyone else in the market saying we use these programs. So when you see stocks like Amazon coming down right to the year-to-date anchored volume weighted average price and bouncing from there twice so far this year, or a garbage stock off the bottom like Coinbase, where did it pull back to? Right to the year-to-date anchored volume weighted average price with precision. I mean, this is, you can't make it up. You know, Etsy, boom, boom, boom. The buyers are there. They're saying we're buying for the longer term. And then you look at a stock like, you know, everyone likes this Celsius.
Yeah.
Well, Celsius initially found buyers at that, but now the sellers are defending it. We have year to date, the sellers are in control. We have a declining 20-day moving average. We have a declining 50-day moving average. This is not the stock in this group to buy. Monster Energy is the stock to buy. Look at how it finds buyers at the year-to-date volume-weighted average price, and it's breaking out to new all-time highs. What about Peloton? Even that garbage stock when it pulled back. Where did the buyers emerge? Right in there. I mean, I could go on all day with this stuff. Even another garbage stock, Palantir. Buyers, 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 all at the year-to-date anchored volume-weighted average price. How about Square? You know, 1 day below. Well, Brian, it didn't work. Well, again, as I point out in the book, you know, to me, it's a level of interest. It says it's pulled back there. So now what I want to do is I want to look to the shorter term time frame when it is right there. So as it's there, well, that's this point. Do I want to buy at that point on the touch of the year-to-date anchored volume-weighted average price, let's just say was right here? Or do I want to wait for some kind of consolidation, buy as it breaks a higher high right here, and set my stop underneath that most recent relevant low, and then maybe add to it later on? So to me, that's the way, you know, the proper way to use these. And you know, I can go on with, I've got a few, you know, really good examples. I bought the sneaker company the other day on holdings. It broke slightly through that year-to-date volume-weighted average price, but it nailed with precision just below it the volume-weighted average price from this low. So year-to-date, week-to-date, month-to-date are often important. Highs and lows. So for instance, what I'm looking for an on, if we look at this and we back it up, you can see this orange line up there. And what that is, that's the volume-weighted average price from the IPO.
Wow.
So when I look at that, it tells me it's likely to go up to that level. And I don't think it has to halt there, but it's a level of interest where it's going to maybe do something like this, pull back and give me another entry over here, similar to the way I called this one, you know, on the day that Meta reported earnings right here, I said, who's buying up here? This is the average price since the all-time high after the stock just doubled. This is not a place to be a buyer. This is a place to be selling. So since that event, we had a little bit of a wrestle, but now the sellers are clearly in control from that point. Maybe it's going to, you know, before this stock settles down, maybe it's going to do something like this. Maybe the 20-day moving average catches it, or maybe it comes down and catches the year-to-date volume-weighted average price and then goes. But to buy it up here after that big move into a potential, that's all we knew was it was a potential important level. You know, we spoke about energy. So 9, you know, here's, you know, year-to-date, the buyers were in control. The sellers took control right here, defended it. And when we look at that, it looks like it's in free fall. But if we go to this low, maybe there's a reason that the buyers are emerging right there.
Yeah. So, well, first for those who are listening to this, you definitely want to go when you get home. You definitely want to hop on the computer, watch the video at investors.com/podcast, because it's really interesting just seeing all of these anchored VWAPs coming up and showing support and resistance. I think it's really fascinating.
I'll tell you what they need to do
Yeah,
first.
it's one of those things where you say, you can't make this stuff up. One of the things
Yeah.
that's always impressed me, Brian, is when you're on IBD Live, a lot of times it comes down to the penny, almost, and get support exactly where you're like expecting it to. So,
It blows my mind to this day. It really
mhm,
truly does. And there's a chapter in the book as well that talks about how do you want to use the anchored VWAP. It's not
mhm,
necessarily going to be the way that I use it. I
Right.
don't like to buy right here, right at that point. I like to see it stabilize and move away from that and show that the buyers have gained control. But there's enough times where it touches it precisely and then moves higher like on did. I could have owned on lower than where I bought it as it touched that volume weighted average price, which was right here. I bought
mhm,
right here instead.
Yeah.
So, I bought there, after the morning shakeout, and my stop was under here. If I bought there, where does my stop go? I don't know.
mhm,
But here I have a level to protect against. So
right.
before people watch this or watch it once, buy the book at Amazon, Apple, or Google. And I usually don't promote like this, but it's
No,
brand new.
no.
I have to.
Yeah,
For sure.
Um,
No, it's well worth it. I mean,
yeah,
it's an incredible textbook. There's a lot of great examples. And this is the only way you're really going to learn. I mean, just watch these videos, just like Brian said, but having this reference, I think, Brian, one of the things I like about this book too is, and you mentioned this a little bit in the first segment, but you're bringing just a lot of the kind of traditional technical analysis stuff and combining it,
yeah.
right? So for those who are newer to technical analysis, they're also going to learn those concepts too.
Mhm,
it's so important. I mean, all the things that we learn, right? A lot of people look at, head and shoulders patterns, and
Mhm.
they say, well, that's bullish, an inverted head and shoulders pattern. But what they fail to recognize is the psychology of what's going on to create that,
Yeah.
and just how simple it is. It's a pattern of lower highs and lower lows. Then we have a higher low, and as soon as it breaks the neckline, that's the higher high. Well, it's just a transition from sellers in control to buyers in control.
Yep.
And if we can put a volume weighted average price in there that tells us with precision that that's exactly where the buyers do in fact, have control. I mean, it kind of it just adds a little bit of confidence to everything we're doing because again, it's 100% truth of supply and demand.
mhm,
That's all we're looking at.
yeah. And one of the things I really like about what you cover in the book is that again, this whole idea behind the anchored VWAP is that you're sometimes using an event, sometimes it's a year to date, sometimes it's an earnings, but you really go into how do you choose your anchor. Where do
Yeah.
you put that?
Yeah.
So
Yeah.
maybe we could just talk a little bit about earnings and one of the reasons why your earnings are so important. You mentioned a couple gap ups. um,
Mhm.
how do you use that anchored VWAP when there's an earnings? Because I mean, we're right in the middle of earnings season. Well, we're
Right.
we're on the tail end of it, but there's still a lot
Yeah.
of setup that have earnings coming up. And how do you use that for those stocks?
But you look at this INMD, which had a huge, move the last 2 days from 34 to 41.
Hmm.
Hmm.
And, here's what's important about that. It broke above the COVID volume weighted average price, which you can see it held it back here, on several, and here's the anchored VWAP from the IPO. So it was kind of pinballing between or pinching between the AVWAP from the IPO and then from COVID. And then the AVWAP from the all time high, you see how we ran up to it and it's been
Hmm.
kind of
Yeah.
threatening this breakout forever. They reported earnings 2 days ago and it's had this runaway move. Well, I missed it this morning on that little pullback, so I'm not going to chase it. I didn't like the initial volatility. This is an important event. So what I'm looking for in the case of INMD is, maybe it rallies another day, maybe it rallies another 2 days, but eventually it's going to correct. And maybe it just corrects through time where it does this. And well,
Hmm.
what's going to happen is that volume weighted average price is going to be dragged higher by it. So it's either going to correct like that or it's going to come down like this. And then I want to then put an anchored volume weighted average price off of here. Let's say that's the peak. Well, if I have a VWAP off of that peak, I'll say, it'll come down like this. And as long as it's below that, the average person from that peak is losing money. But
Right.
if we then see the volume weighted average price from the low kind of pinch together with that peak, and then the buyers gain control over here, I want to be a buyer here with my stop underneath there, the where that low occurred. FSLY just reported. I missed that one as well. And the question is, do I want to buy it up here? So if we put a volume weighted average price anchored to the earnings, you can see how yesterday it pulled back, or 2 days ago it pulled back to that on the open and then ran. But here's what we want to look for as well. What about the anchored volume weighted average price from these highs? So when we look at this high, that's an important high right here. Maybe it's going to run up to there before it finds supply. So that's, it can give me an idea of where it might go as well. Because as you Justin earlier was saying, what about all the potential for supply from people who are holding these things on the way down? Well, if we can measure objectively where that supply is most likely going to halt the progress of the stock through this anchored volume weighted average price from those emotional turning points. So, where we got a big shock to the supply and demand is one of the best reasons to, places to anchor. And obviously earnings do that. We get a report card for the company of the last 3 months, and wow, they're way better than expected. I got to go in and buy. I don't like to chase them because sometimes they fail. I wait for things to settle down. Sometimes I miss them and they just continue without me. And that's fine. It's about process, and everyone has their own. So there's a lot of ways to use it. You could, anchor a volume weighted average price even to this place where it accelerated, or the handoff, and maybe say, okay, well, I purchased on this day. Now, as long as it remains above that volume weighted average price from that acceleration point, I'm going to raise my stop up underneath the higher lows with that, and I'll get stopped out here because maybe then it's going to come down to this one, and I can reload and buy on the way back up.
Yeah. Great stuff. And so again, this is definitely one of those episodes where you really want to check out the video, because Brian's markups, again, we handed the controls over to him.
Yeah.
We couldn't trust it in anyone else's hands. So definitely check that out at investors.com/podcast. If you're listening to this, really great stuff on the videos. And speaking of videos, we should also mention that you've got a lot of videos, weekly content that you do on YouTube, because a lot of the stuff, it takes a few times. It takes a few times to really kind of get like exactly what you're doing and how important this is and how well it works. I mean, once you see the 50th time that it's coming right down to that level, you start getting a little bit more confidence in it. So certainly at YouTube, you can just look up Alpha Trends and watch a lot of Brian's content. So
yeah.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.